What would happen to the real estate market if the dollar crashes? What if the sky falls out? Will the wealthy still be wealthy? Will you lose your money? Will you lose your investment? We're going to talk about that here for you now. We're going to talk about what type of asset real estate is and how it responds to a devaluation of the currency. We're going to show you which markets may survive a dollar crash and why. So when currency, the US dollar, goes down or crashes against other currencies, what happens is that tangible assets like real estate they have inherent value, okay? So there's a certain cost to build a property. It's not going to go to zero. Those property values may be affected somewhat to go down, or they may go up. It kind of depends on where they are and what kind of property they are. So for example, if you take a city like South Florida, Miami, if the currency went down, foreign investors may pour in because their currency now has more value in the US and buy more assets in a place like South Florida. That may not only stabilize real estate prices, but actually make them go up. Even though the market currency is going down, the foreign investment coming into the area may actually support property values and bring it up. We saw that with the cheaper dollar in places like Los Angeles and the San Francisco Bay Area, where foreign investment from Asia came in and bought a lot of property because their value of their currency was worth more in the US. So currencies fluctuate on a regular basis, and the demand for real estate by foreign investors as the dollar gets weaker or crashes or comes down tends to increase because foreign investors in the United States real estate is a desirable asset to own. I remember years ago when the dollar had gone down and Japan was buying a lot of property, and I believe they bought a big property down in the Monterey area, Pebble Beach. And I remember they bought that property, people were concerned, oh, these foreign investors are buying US assets. And what ended up happening was, as things fluctuates in our economy and real estate prices went down because of our economic recession, they ended up selling it actually, I believe, for less than they actually bought it for. So real estate prices do change and currencies can affect real estate prices, but generally because real estate is a tangible asset and has inherent value, it's a physical thing that's there that costs a certain amount to build, real estate prices don't tend to crash with the dollar like you may think. And foreign investment, when the dollar crashes, may support real estate values and in some areas cause real estate values to go up, as they did in the San Francisco Bay Area, for example, when foreign money came in and was buying up a lot of the properties. These type of things are great for real estate investors to understand, which is why I suggest that you subscribe to my channel. I can help you to learn more about real estate and the economic fundamentals that affect real estate and affect your long-term wealth. Now, typically when the dollar quote unquote crashes, it usually comes back, right? So foreign investment is always buying bonds, US treasuries, as well as selling, right? So there's a certain market that goes there. The same was with real estate. Real estate is being bought and sold all the time. So when a value of a property goes down, more buyers come in and those properties tend to be absorbed rather quickly. When real estate values go up, sometimes properties are refinanced or sold to get that capital to trade or to take the money to buy other things. The other thing is that there's effect on trade and jobs and the development of products and services depending on the flow and the value of the dollar. Some investors like a weaker dollar because of its ability to buy goods and services, and some like a higher, stronger dollar for other reasons. There's arguments on both sides. At the end of the day, as a real estate investor, your ability to sustain decreases in the value of the dollar. In other words, there's more dollars out there and it's not worth as much because the government's printing money. Real estate tends to be a hedge against what's the result of that, which is inflation. It costs more dollars to get the same thing. That's why people often talk about paying with tomorrow's dollars, which are cheaper dollars. If I can hold on to my money today longer, or my asset today, and I can pay it off over time, those dollars aren't worth as much later on down the road, giving me more value today with those dollars. Now, if there's a global financial crisis like there was in 2007, 2008, it's going to take years for all the economies to recover, but everybody's going to be in the same boat. So if there's a global recession or depression, okay, we're going to have to ride that out. But there has been a lot of controls put in place since 2007, 2008 to ensure that banks have more liquidity than they used to. And in terms of people buying and borrowing for real estate, that they have more cash invested and that their financials are evaluated to ensure they have the wherewithal to be able to make the payments, unlike what has gone on in the past. And that came out of the Dodd-Frank bill, which basically required and regulated the banking industry to have more reserves and to ensure a less chance of failure if there's a stress in the economy. So at the end of the day, as a real estate investor, you want to be patient and you want to hold your property as long as possible. And as long as you have good cash flow and you're paying off your debt and you have excess money, there's no reason to ever sell unless you want to get out of the business, or you want to trade into some other type of property, or you've died and you left it to your estate and they want to get rid of it, because it's a perpetual cash machine. It is generating cash flow, it's paying off debt, and as inflation rises and rents rise, it's increasing in value. And that's why people who own real estate can become very, very wealthy over a period of many years by being patient and letting the growth of the value of the property go up as rents rise and the debt on the property go down as mortgage payments are made and tenants pay down the debt. And that spread between lower debt and increased rent and increased value creates real wealth that allows you to refinance that cash out and use it for more real estate to build your portfolio, or leave it to your heirs if should you pass, or otherwise just enjoy the benefits of owning that real estate and depreciating it to get cash flow that is deferred in terms of paying taxes, which I've talked about other places. Note that currently there is talk about changing some of the tax law, and always consult your accountant and your tax attorney regarding any financial advices for informational purposes only, and understand that in all of my videos, they're all informational, educational, and you want to use these professionals and you want to pay these professionals. Sometimes, you know, paying $1,000 or $500 or a couple $1,000 to get the right information can make a huge difference in protecting you against fluctuations in the currency and establishing a tax plan for you to make sure you're stable in terms of paying taxes and what you owe, and also an estate planning of how you want to manage your estate, put it in a trust, leave it for your heirs, etc. So all these things are important to you, and it's important that when you least expect it, you understand that something could go wrong. So it's important to plan before things go wrong and not call when they do, call before they do, and have a plan of action should something happen. Lastly, remember, as you build that equity in your property, over time you're depreciating the value. You may reach a point where you don't have much depreciation left to take, and that's where you may exchange into a larger property so you can start depreciating again. And that has to do with tax bases and other things that your accountant can help you understand. So if you want to learn more about the real estate potential crash and the market and some of the things I've talked about, go ahead and look at what happens to the real estate if the market crashes. And I have that video and you could go check it out.